I mean, you're getting into a nursing home where either you come out healthy or you straight go to the deathbed. So it's as simple as that. There is no second, there is no second stop. Either I am able to convince the creditors that there is a resolution possible, the company must be revived. Otherwise, the company will mandatorily have to go for liquidation. There's no, there's having filed for insolvency, the discretion completely goes from the company to the creditors, and the creditors will decide whether the company will be revived or the company will be taken for liquidation. Okay? Then the liquidation process starts. So resolution plan will be prepared by creditors, and all decisions of creditors will be taken based on 75% majority. So when we say 75% majority, 75% in value obviously. 75% of the creditors in value will take decision of whether to resolve, what will be resolution plan, etc. Which means there is a 75% sanction on a revival plan. Now when we say this 75% sanction, does it include secured creditors only, or does it include secured as well as unsecured creditors? That's first question. Second question could be, does it include only financial creditors or does it include operational creditors also? So second question first. The voting right, 75% voting right, voting rights are given only to financial creditors. An operational creditor has a right to file for insolvency, but an operational creditor does not have a voting right at all, unless there are no financial creditors in the company at all. That's a company such where there is no lender at all. In that case, operational creditors will have a right. Otherwise, voting is done by financial creditors only. That's one bit. Second bit is, are we giving voting right to secured creditors only, or are we giving voting rights to secured, unsecured creditors both? For example, the company has taken a loan which is secured. The company has, let's say, taken unsecured loans also. So are we treating secured, unsecured lenders at par, or are we giving higher voting right to secured creditors? Answer is that in all insolvency liquidation processes, we always treat all creditors at par. That is to say, we give equal voting rights to secured as well as unsecured creditors. Therefore, secured creditors cannot have an upper hand. Unsecured creditors also have equal voting right based on amount of debt due to each creditor. That's the process of approval of resolution plan. I mentioned 3 cases where the company will go into liquidation. Once again, this is very quickly recapping. Either the creditors are unable to agree on resolution plan within 180 days, or the creditors decide not to revive at all, or the company does not act as per resolution plan. In that case, we go to the next step, which is liquidation. So, as auditors, as chartered accountants, we know there is a difference between going concern and not being a going concern. Going concern means what? The company is still an ongoing, and the company is still a going concern. During insolvency phase, the first phase, is the company a going concern? Will the business of the company continue?
No.
Of course it will.
Yes.
Because the whole purpose is to revive. If the company stops its business, how will the company revive? So the company has to continue to do its business, therefore the company remains a going concern during insolvency phase. During liquidation phase, we come to a conclusion that we are not interested to revive the company at all. So that once liquidation is ordered, the company ceases to be a going concern. Now the company becomes a gone concern. That would mean the company is now no more a going concern, because the company has now been put into liquidation. Now, quick more points. Normally, when the company's business is, let's say, healthy, the company is run by its board of directors. Right? The board of directors takes upper decision. Under the board of directors, we have the executive management, normally headed by managing director or CEO, and then under that we have a complete machinery of employees. During insolvency process, who will run the company? Will the BOD, board of directors, run the company? So currently the company is not in liquidation, because we have not decided that the company is getting into liquidation. At this stage, the company is under resolution. So here we call it resolution professional. So instantly, as insolvency application is admitted, we will appoint a resolution professional, RP. Resolution professional. Who is typically an RP? I mentioned earlier, remember I said that there is a tremendous opportunity for all professionals. So if the experience of UK is relevant, mostly it's chartered accountants who act as resolution professionals. So that's a opportunity for everybody. In order to be a resolution professional, what is relevant? Just being a FCA or ACA, is that relevant? Or just being a member of ICA, is that sufficient? Or do you need to do anything further? Very soon, the Insolvency and Bankruptcy Board of India is expected to launch an examination syllabus. They'll come up with, I think draft syllabus is almost ready. In just a few days time you'll get this, I think syllabus will be out. And they will have an exam, so I think some 11 topics are there with different weightages. So chartered accountants, advocates, company secretaries, if they want to become insolvency professionals, they'll be asked to sit for an examination. So if you qualify for the examination, well, you are a CA and you also qualify for the examination, you are then qualified to become an insolvency professional, and then you can act as resolution professional as per under this law. The IBBI, the Insolvency Bankruptcy Board of India, is already constituted. I'm not sure whether we have had a meeting in ICI, but in other ICI, Institute of Cost Accountants of India, I'm told that there was a meeting, and Mr. Sahu, who is heading the IBBI, had already done a meeting there. So, but IBBI is already functional. It's still a very small entity. It's sitting from the office of Institute of Cost Accountants of India. They don't have a place as of now. In New Delhi. They are sitting from ICAI premises, which is not Institute of Chartered Accountants of India, but Institute of Cost Accountants of India. But I think soon they will have their own place, so they will start being fully functional. But anyway, so you can act as resolution professional. So I said during insolvency phase, board of directors will become suspended. Board of directors are not removed. Directors don't lose their office, they become suspended. Suspended meaning what? Until the resolution goes. But until the resolution plan is sanctioned, they will cease to have their powers, and the powers will be exercised by the resolution professional, a sort of administrator. I mean, the RP is a sort of an administrator. His job is to basically try and revive the company.
But who will appoint this RP?
Very good question. Who appoints the RP?
The creditors.
Absolutely. So first, there is something called interim resolution professional and final resolution professional. I am sure you can understand in case of courts also, we have an interim or provisional liquidator, then we have a final liquidator. Similarly, here we have an interim resolution professional, IRP, and then we have a final resolution professional. So the IRP is, for example, if let's say State Bank of India files an insolvency application, then State Bank of India will name. SBI will say that Vinod Kodani will be the interim professional. So that my name is put as interim professional normally by the applicant itself. That's the interim professional. What's my role there? As an interim professional, what is my role? My role is to call a meeting of the creditors to decide on who will be the RP. Are you getting it? I am the interim one, so I am like a caretaker government. My job is to call the creditors to decide as to who will be the resolution professional. So the first meeting will decide whether I will be the final resolution professional or somebody else will come. Right? So the appointments are done by creditors.
Sir, can RP interfere in regular procedures?
Of course, the RP is the one who runs the shops. He is the boss.
BOD is totally different.
Absolutely. The BOD gets completely suspended. What happens to the executives of the company? The finance manager, the CFO, the CS, the MD, what happens to them? So they will cease to exercise their powers as a board member. Board will become dysfunctional. For example, managing director will be a manager but not a managing director. He will not be a director anymore because board is not exercising any powers. The entire executive machinery of the company will remain intact, but the board will become dysfunctional because the resolution professional will call the shots. He becomes the boss. He has to now run the business of the company. He is running the business of the company while under the control of creditors. So the entire thing is directed by the creditors because committee of creditors directs everything. Resolution professional is the one who is executing it, and the board of directors is completely suspended. Executive machinery of the company will have to continue to work because the company has to run its business still. But everything is happening under the control of creditors. Please do understand that once the company has become insolvent, the shareholders who are the boss of the company are they are the owners, they are the boss. But once the company goes into liquidation, insolvency, the shareholders cease to exercise powers, and the powers are exercised by the creditors because situation where the company has not been able to take care of its obligation.
So RP will be a single person or there may be number of persons?
So first of all, RP could be a firm. It need not be an individual. For example, let's say Vinod company is a firm, several persons are there, that's one possibility. Currently the draft rules for RPs, the draft rules are not talking about LLPs right now. But I am sure going forward, they will even permit multidisciplinary partnerships. So a chartered accountant, company secretary can join together because this is a multifunctional role. You know, for example, for running a company, I need somebody having engineering expertise. I need somebody who's got a legal expertise. I need somebody who's got a financial expertise. I need somebody who can deal with the bankers. So how can a single person combine all these diverse skills? So I'm sure there's a good case for permitting LLPs consisting of multidisciplinary experts to take forward the process of resolution. But as it stands, either a company, in fact, so companies are also permitted. A company can also act as a resolution professional, that's clearly permitted. Or it can be a chartered accountant, or so anyone who is recognized as insolvency practitioner by the IBPI.
Sir, suppose there is a chartered firm, so I'm one of the partner gave that exam, so the firm gets qualified or the individual gets qualified?
We'll have to wait to see the final rules, but I'm assuming that one of the partners will get qualified. In that case, that partner, not the entire firm, that partner is entitled to become an RP.
And sir, is there any time limitation within which this resolution plan has to be formulated?
180 days. 6 months. As I mentioned, within 6 months the plan has to be passed by the NCLT. Prepared by the creditors, taken before NCLT and passed by NCLT. Within 6 months the creditors are unable to pass it, they may on their own discretion extend it by another 3 months. So 6 months plus 3 months, maximum 9 months.
But if a multidisciplinary LLP form can be done by chartered accountant with CS, CMA and no other person.
So we will have to wait for the final rules to come on this.
With the multifunctional LLP of chartered accountant firm, if they want to do, they will, I know they can do with CS, they can do with CMA. But they cannot do with advocate and engineers and MBA. That is not allowed under our institute.
So far even CSCS is not allowed. So far I don't think ICAI permits a chartered accountant to become a partner with a company secretary or a CS to become a partner with a CMA. As of now, not allowed.
The institute has permitted multidisciplinary.
Regulations are not yet
Other
up.
institute has not permitted.
So currently it's not yet applicable, but I am saying futuristically, particularly for insolvency profession, because this is a very multidisciplinary activity. So I am sure IBPI will take a practical view and permit LLPs consisting of multiple professionals to be admitted as insolvency practitioners. But as of now, difficult. The rules are draft rules are there. Rules have not become finalized yet. So it's currently difficult.
Sir, if the RP is of the opinion that this company cannot be revived and he cannot formulate a resolution plan, then what will the scenario?
What's the role of the RP? Is he the one deciding whether the company will be revived or not? So role of RP is simply to conduct meetings of creditors. Decisions are to be taken by creditors, not by RP. RP is sort of the convener.
He will implement the decision. He will implement the decision.
His role is to call a committee meeting and let the decisions be taken by meeting of creditors. He is not exactly in position of receiver because the company is not in liquidation so far. He will run the business. Executive management will run it, he is the one in supervisory position, so he will let the business continue for the as per discretion of creditors. Discretion is on the creditors so far.
Sir, then what does this say that there is written that they will have a the resolution plan, then what will this resolution plan contain? Like how to run the business? What will be the content of this resolution plan?
Normally, a CDR plan, what does it do? Corporate tax restructuring, what does it do? For example, original repayment was 3 years. CDR may extend it to 5 years. The interest rate might be reduced. Some part of the loan may be converted into equity. So likewise, any resolution plan gets into what is sustainable, obligation which the company may service. This plan is prepared by creditors themselves and is implemented with creditors' approval. So a typical resolution plan, for example, it will say, let's say royalty is going to holding company, stop it. Dividends, no question at all. Interest payable to, let's say, unsecured lenders will be stopped. Any non-core asset, for example, the company is having a used building which is not of any relevance. Let this building is sold, money will be realized. The company may move from a larger office to a smaller office and so on. So the resolution plan will get into various aspects, trying to save the cost, trying to,
resolving the issue pending before.
Absolutely. So the RP or the creditors will have to get into what the issue is. The resolution plan is prepared by somebody called resolution applicant, which is let's say specialized body which prepares resolution plan, getting into the core problem. The core problem of the company might be, let's say, dull market. If the problem is in the market itself is dull, what can you do about it? So then you probably have to wait for a certain time. The creditors will rather have to give a moratorium. Let the company continue the moratorium for 2 years. Let's see when the markets revive. If the creditors are of a view that's not a market issue, it's, let's say, management issue, then the creditors may decide that we'll change the management. Or let's say the creditors decide that the company is incurring wasteful expenses, that's why the business will become bad, they will stop that leakage. So the creditors will have to get into what is the root cause of the problem and whether the problem can be resolved by taking some corrective action. If yes, that's what the resolution plan tackles. If creditors come to a conclusion that it's a gone case, nothing can be done, let the company go into liquidation. Normally liquidation does not help anybody, because neither do the creditors get paid, nor does the shareholders get anything.
So if you are satisfied that why business is not running properly, then moratorium period can be increased from 180 days to 90 or 90. Extended for
180 days is the initial moratorium, extendable by maximum 3 more months.
it cannot be extended more than that.
This law has stringent time limits. 6 months plus 3 months, that's max. That would mean it cannot go beyond 9 months. Within 9 months, the creditors have to either agree or the company will go into liquidation path. Unlike SICA, where everything could be dragged for infinite period, under this law, everything is completely time bound. So liquidation will commence either on rejection of resolution plan or failure to prepare it, or the company not adhering to the resolution plan. Now, once again, the moratorium starts here. During liquidation phase also, that's a second moratorium. You can see that there was a moratorium on the left hand side, first moratorium, and this one is second moratorium. What is the difference between these two moratoriums? Moratorium during resolution and moratorium during liquidation. Moratorium during resolution, SARFAESI action or any enforcement by the creditor is completely blocked. That would mean there is no SARFAESI Act action during the resolution period. During liquidation period, can a creditor take SARFAESI action? Answer is yes. Even if the company therefore is going into liquidation, if State Bank of India says I have got an asset, I would like to enforce my security interest on the asset, it may straight give a 13/2 notice and repurchase the asset. So during second moratorium, action by the creditors is not restricted. Creditors may take their own action and repurchase security interest. It's up to the creditor. Whether the creditor wants to take action of enforcing security interest or the creditor wants to relinquish security interest, the choice is that of the creditor. You might probably ask, why would a creditor want to relinquish security interest? Why would a creditor want to give up? Relinquish meaning sacrifice security. Why would he want to? Is he like being a generous person? Is generosity?
No.
So why would he like to give it up? This is a very essential question for a creditor, to either use the secured asset or to relinquish security interest and claim from the total assets of that entity. So I'll give an example. Let's say the total assets are 600 crores. I have a security interest on an asset the value of which is 100 crores. My claim is 200 crores. So if I realize my security interest, how much will I get? My claim is 200, the asset on which I have security interest is worth 100 crores. Let's say I've got a mortgage on a property valued at 100 crores. How much will I get? Obviously 50%. If I give up my security interest, then what?
You may get more.
Then I can claim from all the assets. So the principle of liquidation is that if a secured creditor gives up his security interest, in that case he can claim from all the assets of the entity. He becomes the first claimant from all the assets. So the creditor has to see whether it makes better sense to enforce security interest and stay out of liquidation, or to give up the security interest and join the liquidation proceedings. This is a very tricky call, and is to take this call instantly as the liquidation proceedings begin, because once he decides to
Personal guarantee would be a secured exposure or an unsecured?
personal guarantee is never a secured exposure. Personal guarantee is what? Guarantee of a person. So like a borrower, every person who takes a loan gives an obligation that he will pay. Is that a secured obligation? Because that's basically what? That's the obligation of the borrower to pay. A guarantee means if I don't pay, my guarantor will pay. That's also a personal obligation of the guarantor. No, it's not. Collateral means asset. So please do understand meaning of secured, unsecured. Unsecured basically what the obligation is that of an entity. That's called an entity, personal obligation of it. Personal meaning obligation of the entity. For example, if a borrower says I'll pay, that's obligation of the borrower. Guarantor says if he doesn't pay, I'll pay. That's also obligation of the of a guarantor. As opposed to that secured obligation is what? If I don't pay, my house is there. So the obligation shifts to an asset. Instead of being an obligation cast on a person, it becomes obligation of an asset. The obligation shifts to an asset. That's what is called secured obligation. So where there is an asset available to repay the claim of the creditor, that's when we say there is a secured obligation. So if the creditor, for example, while giving guarantee, the guarantor, for example, giving guarantee, has created a mortgage, has created a pledge, that's when we say the obligation becomes secure. So there must be an asset to back up in order for the debt to be taken as secured obligation. Even for Schedule 3 of the Companies Act also, the difference between secured and unsecured is secured assets are those, secured obligations are those where there is an asset backing it up. So second one.
Sir, can this resolution plan after some time can be reviewed or say extended?
So let's say resolution plan is prepared, then what's the process? Then we will have to take to NCLT. NCLT passes order enforcing resolution plan. Later, let's say resolution plan is found to be impractical, and the creditors once again go to NCLT and say, well, it's not working, so we want to amend it. So they might once again have to prefer an application to NCLT to restart the process of revising the resolution plan. Yes, possible. It's possible, but that has to also act as per sanction of the creditors. My basic idea is that the upper hand is that of the creditors. The company in question does not have a discretion, the upper hand is that of the creditors. During the liquidation phase, a very important question that comes is avoidance of certain obligations. Avoidance of certain transactions become avoidable. Avoidable or avoidable is different from a void transaction. Void is something which is void. Bad. It's just a scrap, just junk it. Voidable transactions are those which may, at the discretion of whose discretion? In this case, a liquidator now. During liquidation phase, that resolution professional has now become a liquidator. During resolution phase, he was an RP, resolution professional. Once liquidation commences, he becomes liquidator. Once again, who can be liquidator? Will it be official liquidator of the High Court? Under the code, no. It can be a CAS, it can you all. Any of you can become a liquidator. So once again, if you are an insolvency practitioner recognized by IBBI, you can be an RP, you can also be a liquidator. What's the role of the liquidator? The role of liquidator basically, what does the liquidator do? Does he run the business? Absolutely. He does not. He stops running business. Now the business cannot be run. During resolution phase, he was running the business. During liquidation phase, his job now is to liquidate the assets to pay off the creditors. But well, he also has another significant role, which is this avoidance of certain transactions. So what he also does is, he examines the transactions done during recent past. I'm sure you all understand কি হয় যখন ডিফল্ট হয় তার আগে কিছু একটা মানে মিসডিলিং আরম্ভ হয়ে যায় না কিছু একটা অ্যাসেট এদিকে লুকিয়ে দেই কিছু একটা অ্যাসেট ওদিকে লুকিয়ে দেই I'm sure many people are doing it right now also, right? Some people are caught at the airport.
500 টাকা এটা কোথায় লুকোবে
লুকাচ্ছে তো এরপরে ধরা যাচ্ছে লোকেরা
স্যার এখনো পেমেন্ট চলছে লোকেরা
আফটার 31 ডিসেম্বর
চলছে আমাকে বলবেন স্যার কোথায় চলছে
सर हमारा फीस देने के लिए कोई भी क्लाइंट आया बोला मेरे पास तो पुराना रुपया नया रुपया नहीं है
आप सर ले रहे हैं तो मेरे को बोल दीजिए मैं देता हूँ बदले में मेरे को 100 रुपीज दे दीजिए I think this is everyone's concern, so I'm sure
सर भाव 35 पैसे का चल रहा है
65 पैसा मुश्किल है I'd rather pay tax ना 115 BB is I think much better
65 वापस मिलेगा 35 लगेगा
115 BB I think is better
सर पेनल्टी भी तो है
नहीं उसको रेट्रोस्पेक्टिव अमेंडमेंट करने जा रहे हैं
सर 30 के ऊपर
Retro.
हां रेट्रो इस फाइनेंस एक्ट में
this country will lose all its regard for the Constitution of India if the government imposes a retrospective penalty. Law as it stands and Constitution as we've understood is that you cannot have a retrospective taxation.
सर अमेंडमेंट तो सारा रेट्रोस्पेक्टिव ही आता है
Clarificatory. Time-tested principles of the Supreme Court is that you can make a clarificatory change in law. You cannot make a substantive because citizen of the country cannot be told that I was liable in the past also. I can be liable prospectively, I cannot be liable in the past because I am given no opportunity of rearranging my affairs. So I cannot be told, taken by surprise of some liability which as per law existed as on 1st April 2016. That's not, I mean my understanding of the constitution of the country is that there's absolutely no way. This has been I think time-tested principles of Supreme Court in several cases under section 115J also, long time back. Supreme Court constitutional bench has decided that you can make a clarificatory amendment. You cannot make a substantive amendment imposing a penalty from a retro date. But given the state of the country, I think anything can happen.
मेरे लगेगा जो 200% जो बोला है 278
So once again, I would say I am stepping out of my topic in case I discuss this. Nitesh ji is holding a separate meeting for that. But in one recent DTPA meeting, I think 2 days back, the consensus seemed to be that 115 BBE read with section 68 imposes 30% tax and that's it. Because penalties for misreporting and penalties for tax that I have sought to evade, if I paid my 30% tax, what have I evaded? I have evaded 0. So impose 200% on 0. Impose 2000% on 0, how does it matter? Any percent of 0 is 0. And provided the assessee himself is reported, so there is no question of misreporting. Misreporting comes when, let's say, my actual credit was 10 crores but I showed 2 crores. If my actual credit was 10 crores, I showed 10 crores, where is the question of misreporting? That is what seemed to be the consensus. You all are maybe better.
that is correct that's correct
And some of my IT practitioners, they also said that they've been discussing with several commissioners of income tax also.
sir there may be amendment
So that's
What
what
my amendment is
my view is that, my view would be, though as I said that currently the time that we are passing through, I think it's such a strong time that anything can happen. Because if one can argue that my money lying in my bank, I have to queue up for 4 hours to draw my own money. And I'm not sure why. It's my money and the bank was under obligation to allow me to withdraw my money. I have full right to withdraw my money, after all it's my money, not government's money. And there's not even a cloud to say that my money is suspect money. I'm a fully compliant taxpayer, I have to withdraw my money and I have to queue up, I got a limitation, I can't withdraw more than this amount. So this is, I'm saying everything is possible in the current scenario. Though my feeling is that there's no question of an amendment to law retrospectively amending a particular section, particularly penalty section. That's my view, but let's probably wait to see what the eventual outcome is. So that topic I'm sure is more tempting than bankruptcy code.
yes
I have to come out of the temptation once again. So avoidance, the liquidator's job is not just to sell the assets but also to examine transactions which were suspect. What are suspect transactions? There are 4 types of suspect transactions. There's something called voidable. So 4 types of transactions are undervalued transactions, undue preferences, fraudulent transactions, and extortionate credit. There are 4 types of transactions the liquidator may question. Number 1, preferential transfers. Number 2, undervalued transfers. Number 3, fraudulent transfers. And number 4, extortionate credit transactions. I'll talk about each of these 4. There's a period in the past during which the liquidator may go to question these transactions. The period is 1 year in case of a regular transaction and 2 years in case of transactions with related parties. So transactions with related parties, you can go 2 years back to question transactions. Other transactions you can travel 1 year back and question transactions. Undue preferences. First step, undue preference means what? For example, let's say there were 10 creditors. 1 was paid, others were not paid. So can he bring back the money? Yes, the liquidator may question this transaction that this was undue preference. Somebody was paid at the prejudice of other creditors, therefore the money should be brought back. That's one example of undue preference. Undervalued transactions. Undervalued transactions mean what? There can be 2 types of undervalued transactions. I buy an asset and pay more than the fair value, right? I settle a liability, so I either buy an asset paying more than the value, or let's say I sell an asset and get less than the value. So I got a building worth 20 crores, I sold it for 5 crores. In the process, there is a damage to the fund. So all these undervalued transactions may also be questioned by the liquidator. When we say questioned, liquidator may file a case to NCLT that these transactions I want to wind back, avoid. If the NCLT passes order, the transaction will be cancelled and the property will be brought back. Third, we said fraudulent preference. Any transaction which involves a fraud on creditors. There is no time limit for fraud. Fraud can be any point of time in the past. Liquidator may question a fraudulent transaction and may cancel a fraudulent transaction also. Last one, extortionate credit transaction. The company has borrowed money on extortionate rates of interest, very high rates of interest. Then the liquidator may question those transactions also. Transactions by regulated financial entities, for example banks or NBFCs, those transactions are protected, they cannot be questioned. Transactions from other lenders, for example let's say group companies, etc., if they are on extortionate terms, they may be questioned. So it said last is a secured creditor may either relinquish security interest and may join the bankruptcy process, or he may enforce his own security interest. So like I give an example, let's say there's an asset worth 100 crore, I'm a secured creditor, my claim is 200 crores. I may at my choice enforce security interest. So in which case I get 100 crores. Remaining 100 crores, what will happen? It will become unsecured obligation. So it will rank towards the later part of the priority order. Therefore, chances are that I may not get anything at all. Or I may give up my security interest, in which case from all the assets, I will be given the first priority. That's the meaning of secured creditor. Now, I'm sure every case of bankruptcy is a case of shortfall. Assets are less than the liabilities. So as we distribute the assets, what's the priority order? We call it priority order or waterfall. Waterfall meaning, in what order of priorities will we distribute the money? So who do you think? There are several types of claimants, let's say government claims, secured creditors, workers claims, other financial creditors, operational creditors, and let's say, so variety of, let's say preferential holders, equity holders. Who will get paid in what priority order? Who is the first one to be paid? Or government claims?
Government use first.
Government is first.
Secured, then preference.
Government is first.
First secure.
Labor payment.
So the position under the existing law was that government claims were item number 1. Statutory claims have to be paid first. That is the basic. That's what we grew up as students of Companies Act. We grew up with this understanding. Government claims first. So among lots of bold steps that this government has taken, an extremely bold step they have taken is that they have given government claims item number 5. From item number 1, government claims have shifted to item number 5. In fact, below the claims of unsecured lenders. Even unsecured lenders have a priority over government claims. DD has probably not understood, huh?
Government will be the last one.
5th one. So DD has probably not understood. What implication might this change have? DD is understood demonetization but probably not understood this one. কি হবে স্টেট গভর্নমেন্ট ট্যাক্সে কি হবে যেমন সেলস ট্যাক্স ডিউ আছে তার কি 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 পাওয়া যাবে বুঝেনি মনে হচ্ছে বুঝেনি কানে যায়নি না মাথায় যায় মনে না কি বেরো আরো অন্যান্য বেশি বড় বড় চিন্তা এখন মাথায় রয়েছে এই চিন্তা এখন আসেনি এখন বুঝেনি মনে হচ্ছে কেন প্রবলেমটা হচ্ছে কি in any case of default government taxes are also unpaid. Substantial VAT liability, substantial excise liability, substantial customs liability, income tax liability, TDS has not been deducted but not paid. Most defaulters will have TDS, they have deducted happily but not paid to the government. So what will happen to those claims? Earlier it was item number 1, now it's receded to item number 5. So that would mean state government will not get its taxes. If the state government does not get taxes, I don't know how would the government run.
So what is the PF that is deducted from the PF that is deducted from the employee salary and not deposited? Then it will be unfair if it is comes to the
to the extent of employees' contribution, the company is merely a trustee. So that money does not form part of the company's property. Company's own obligation is the obligation of the company towards that's employees. So that's the due to the employee or dues on account of employees. So that is secured obligations and workers' claims. That's item number 1. Item number 1 is secured creditors and workers pari passu. That is workmen's claims and secured creditors are proportional. They have to be paid first. Second item will be other employees. Worker is a particular definition. Worker as defined in Payment of Wages Act. Item 2 will be other employees. For example, senior employees. There will be number 2. Number 3 will be other unsecured creditors. Financial creditors.
Other unsecured.
Financial creditors, unsecured. Secured creditor number 1. Number 2, other employees. Number 3, other financial creditors. Number 4 will be those secured creditors unsecured part of secured creditors obligations. So like I gave the example, 200 crores worth claim, 100 crore property, the remaining 100 crores comes under item number 4. Item 5 will be other claims and the claims of the government proportional. So other claims will be, for example, operational claims, supplies of goods and services, other services, that will be item number 5. Item 6 will be preferential shareholders, item 7 is equity. Preference and equity, I don't think there will be any question of paying because the company is already insolvent and therefore no chance that there will be anything to pay. So end result of this
proportionate देने का नियम नहीं है क्या?
किसमें?
Proportionate.
किसमें?
और ऐसा रिकवरी हुआ उसका proportionate दिया था.
Priority order ना?
में 4 पैसा.
So within a particular priority. So proportional within a particular layer. First layer is secured creditors. Secured creditors and workers. That's layer number 1. So within that layer, everyone will be paid proportional. But for example, unsecured will be layer number 4. So therefore, unsecured cannot claim priority in the first layer. So it would be paid layer wise, tranche wise. First layer, secured creditors and workers. Then comes employees. Then comes other financial creditors. Then comes unsecured part of those secured creditors who prefer to enforce security interests. Last result is of course dissolution. All assets distributed, money is being paid off, the company is taken to dissolution. Now, in case of voluntary liquidation, healthy companies, कितना पैसा
830.
people might just
नहीं As you wish.
I don't know. It's entirely on the audience because those who
Yes.
came for CP hours, I think they have signed and gone already. And the remaining audience, I guess, are seriously interested in the topic.
Subject.
Huh?
Who are present are interested
Interested in subject. So please do let me know when your tolerance power is
Our
over.
tolerance power is enough. I will continue, sir.
Thank you, sir. So blessed. So I can see a lot of people have actually walked out, but
Maybe.
please
There
don't.
was some other work. Definitely, that's why they are.
But for you all, I'm sure this is more important. You got other work also, but you give more weightage to it.
Yes.
Thank you very much. Thank you very much for staying back. So I'll talk about voluntary liquidation. Voluntary liquidation happens in case of what? Solvent companies. If the company is solvent, company is not insolvent, that would mean under the existing law, what's the system of voluntary winding up? Normally I've not seen many chartered accountants handling liquidation cases. Existing law, there are two types of liquidation: compulsory liquidation and voluntary winding up. Voluntary winding up also is of two types: members voluntary winding up, creditors voluntary winding up. There is also technically a third type of winding up called winding up under the supervision of court. This was there in 56 Act, later on deleted in the 2013 Act. So under 2013 Act there are only two types of liquidation: voluntary, compulsory liquidation, compulsory winding up, and voluntary winding up. Voluntary, once again, split in two parts: creditors and members. In a voluntary winding up, the presumption is that the company is still solvent. So how do you know the company is solvent? The directors give an undertaking, they give a declaration that the company is solvent company. The directors file a declaration of solvency. That becomes the basis of taking the company to voluntary liquidation. The declaration of solvency basically is to say that assets of the company are sufficient to pay off all obligations, therefore the company can be taken to voluntary liquidation. If you want to wind up a company today, I think what is the common practice? If you want to, eliminate a company, Nitesh ji will also know, many people, it's a very common practice today. We take it to fast track exit. But fast track exit is possible only when the company has no assets and no liabilities. If the company has assets, how do we take it to fast track exit? We can't. So what's the option? Some people say let's merge the company. Some people say let's convert the company into LLPs. But actually the right remedy for this is to take the company to voluntary liquidation. Most of us don't do it because either we don't know the process or we think the process is too lengthy. Actually not. The process may take, I think, maximum 1 year or so, but it's possible to, even under existing law, to take the company for voluntary liquidation. But anyway, that section of Companies Act dealing with voluntary liquidation has now already been shifted to NCLT. I was saying the 15th November notification, just 3 days back, has shifted the process to NCLT. So right now, if you want to liquidate a company, you'll have to file the application before NCLT. What do you need for voluntary liquidation? We need 3 things. Number 1, we need a declaration of solvency from directors. Number 2, we need a special resolution from the shareholders. Number 3, we need a resolution of creditors also. Now difference is here, creditors resolution will be with 2/3 majority. Remember earlier we were talking about 75% majority, now we are talking about 2/3 majority. So 3 things: declaration of solvency, special resolution of members, and creditors resolution with 2/3 majority. You can take the company to liquidation, voluntary winding up. In the rest of principles, distribution of asset will be similar. There will be liquidator who also is resolution professional. He takes care of the process of sale of assets, distribution of the proceeds to the different claimants, and once the affairs are fully wound up, make an application to NCLT for a dissolution order. Dissolution order is the last stage. Non-corporate debtors, that is individuals or firms or let's say HUFs or so other than LLPs or companies, if there is an insolvency there, then what happens? This is a very important principle of law. First, there is something called fresh start order. Fresh start order is a complete waiver. The debt may be completely waived. The debtor in question may apply to NCLT and get or DRT. In this case, DRT may apply to DRT and get a complete waiver of the debt. Loan waiver kind of thing. However, the conditions for fresh start order are so stringent that I don't think any lender will be giving a loan to one such person who qualifies for a fresh start order. Conditions are, for example, what? Person must not be having a house of his own. So he must be a homeless person. His assets are limited to 35,000 only. His income is up to 60,000 per annum. That would mean monthly income is 5,000. His total debt is not exceeding rupees 20,000. So total debt 20,000, income 5,000 per month, assets not exceeding 35,000, not having a house of his own. Such an individual, I don't think anybody will be willing to lend to such an individual. 5,000 per month, ki hoya hai. I think even survival is a problem. But such an individual, if at all he runs into problems, runs into debt, he can go for a straight debt waiver called fresh start order. This of course will be based on order by TRT. This is mostly, I think it will be largely irrelevant, but let's move to the next part. Let's say debtor in question does not qualify for fresh start order and is unable to, he's not paid any of his obligations. In that case, we go for insolvency application. I was mentioning earlier that the three stages in case of corporate insolvency are: first insolvency, leading to resolution. Resolution does not work, the liquidation, finally dissolution. The company is finished. In case of individuals, we said first insolvency, leading to bankruptcy. Bankruptcy will lead to a discharge. So the very important question will be, how long will it take for an individual to come out of the process? That is, for example, bankruptcy starts. When will you get a discharge? Only when everybody is paid off or after a certain time? What do you all think? Will the person remain a bankrupt until all his creditors have been paid off? Huh?
It may not happen.
It cannot happen actually. Because if the assets were sufficient to pay all creditors, the person will not be a bankrupt actually. So that's counterintuitive, it's just unlikely to happen. So the law says after 12 months of adjudication is a bankrupt, the person will get a discharge. खूब बेशी ना 12 मास लगा 12 मास के बाद discharge पे. Then what happens to the assets? So the principle is that once the person is adjudicated as bankrupt, all the assets of the individual vest in the bankruptcy trustee. In the case of companies, we use the word liquidator. In case of individuals, there is no liquidation actually. So we call it bankruptcy trustee. So all the assets of the individual vest in the bankruptcy trustee. Bankruptcy trustee will start disposing of the assets and paying off the creditors. Whether or not the assets have been completely disposed of, within 12 months the person will still get a discharge. I hope the position is coming clear. For example, let's say I get into a problem, all my assets will go to the liquidator. He might take 3 years to sell off the assets. But after 12 months, I will still walk out of the bankruptcy process. I will say, I am now discharged from bankruptcy process. I am discharged. Discharged is almost like coming out of jail. Even for a crime, a person walks into jail and eventually walks out. Similarly, in bankruptcy also, the person gets into bankruptcy, but eventually the idea is to make him out of the bankruptcy process. He comes out as a discharged man. Until the discharge is given, he is an undischarged bankrupt, but after discharge, he is no more a bankrupt. Now, several conceptual questions. While the person is undischarged bankrupt, that is, he is still under bankruptcy. By the way, I hope I'm clear that after 12 months, he will mandatorily get a discharge. My assets may not have been sold so far, so my creditors are still yet to be paid. But I will be discharged from the bankruptcy process.